Every Forex trader has asked this question at some point. Do economic news events help or do they hurt? For some, they're explosive opportunities. For others, they're traps that can destroy accounts in seconds. The Forex market is driven by expectations. When an economic report is released, price is not only reacting to the data itself, but to the difference between what the market expected and what actually happened. That's why many times, seemingly positive data causes a currency to fall, while bad news can trigger a rally. Traders who don't understand this end up confused, frustrated, and impulsive. In the US market, professional traders don't read news to decide entries in the heat of the moment. They use economic calendar as a risk map. Interest rates decisions, inflation, employment, and growth data are partially priced in before the release. And when the data comes out, the market simply adjusts positions. Those who try to trade without preparation, chasing a few pips in volatility, usually become liquidity for larger players. Economic news also directly affects trader behavior. Ahead of major releases, anxiety rises. Afterward, volatility increases, spreads widen, and price moves erratically. It's in this environment that classic mistakes often appear. Late entries, ignored stops, trades outside the plan. The problem isn't the news itself, but the lack of context and discipline to deal with it. More experienced traders understand that news is meant to define the environment, not to press the buy or the sell button. If the macro backdrop points to dollar strength, for example, they look at trades aligned with that direction after the market has digested the information. Charts are still used for timing, but news helps determine whether a move makes sense or it's just noise. In Forex, trading every news release is a common mistake. Knowing when not to trade is an advanced skill. In many cases, staying out during major announcements protects both capital and mental clarity. The strategic trader uses economic news as a filter, not as an emotional trigger. Economic news doesn't hurt unprepared traders by accident. It simply exposes a lack of method. When used properly, it helps you see the market with more context and less impulse. Now, if you want to evolve in Forex, you need to learn how to respect information without becoming a hostage to it. If this video helped you, even a little bit, hit the like button, subscribe to the channel, and comment below. Do you usually trade during economic news, or do you prefer to stay out? In the next videos, we're going to continue digging deeper into how to think and act like professional traders in the global market.